Well, good morning, ladies and gentlemen. Another presentation in English. I asked my wife whether I should maybe try to do it in German, but when I saw her face, I definitely decided to do it in English. Well, most of you already know Bonhôte-Immobilier. We've been around for 5 years, 5 very active years, and last big story was the merger with the DREF fund that took place 1 year ago. Just a key figure to remind you about the current situation of the fund. We launched the fund in October 2006. Now the total assets are 775 million for net assets of 575 million. Our market cap is 644 million at last Friday, and that gives you a premium on the NAV of 11%. Currently, the yield of the portfolio at the NAV is 6.14%. And as you know, as we own directly our properties, the fund is exempt of taxes for the shareholders, both on the revenues and the capital. Our strategy has always been to invest along the lake in the French-speaking part of Switzerland, or I would say the West Switzerland, because we can also invest in the canton Bern, for example. Why along the lake? It's because we come from along the lake, a place in front of the lake, and it's definitely in the French-speaking part of Switzerland. It's really, those are areas where the quality of life is pretty high, and if you look at the roads and the railways, they all follow the lake shores. Our focus is definitely to really manage the properties one by one on a very proper manner to make sure we maintain the value of all our properties. We don't like properties that we have to amortize. So quality is a key word for us. Location, I talked about lake shores, and you can see where our properties are located, and you can see that we are rather here along the lake. That's the Lake Léman, so those are very attractive areas. We just came out before Christmas with the half-year results, and we were happy to being able to maintain the results of last year, because last year, in the first half of last year, you still had 1.5 months, roughly 1.5 months of income coming from the properties of the draft that we sold before, but whereas the final accounting was done middle of middle of May. What happened in our portfolio with the merger with the DREF is a sharp increase in total assets in the number of properties, and that is a reason why currently we don't feel we are under no pressure to add new properties to the portfolio. We are not desperate to find new acquisition. We have a lot of work to do really to integrate and to optimize the portfolio we have taken over. In terms of leverage, you've seen in the first or second slide that our leverage is roughly 25%. It's well in our objectives, which is having 15 to 30% leverage. Depending on market conditions, we might have the opportunities to go momentarily a bit above 30%, but we are we don't have any vision in that direction. In terms of rental income, here also you can see that our total rental income is currently in the area of 46 million. And you can also see that the merger with the DREF has not changed the proportion of commercial real estate, for example, in our portfolio. This slide is a bit interesting. It's just how our apartments are split by size. It's just to show you that in those markets, the difference between really the town of Geneva, the center of Geneva, and a city like Neuchâtel or an area like Neuchâtel is seen on this slide. Because in Neuchâtel, you can see that normally people want and have larger apartments. And Geneva, it's very difficult to find apartments. Apartments are rather small, and we have a much smaller apartment in Geneva than in Neuchâtel. It's quite interesting. And that explains also in those areas, in Geneva, where you've got small apartments, rents are definitely very high per square meter, for example. And in Le Canton Vaud, it's quite interesting because you have definitely all kind of real estate depending on the area where you are located. Really, the city of Lausanne also, you have smaller apartments, but as soon as you go a bit outside, apartments become much larger. The average rents we have in our portfolio today, as you can see, in Neuchâtel it's 183 francs, in Canton Vaud 196, and 2031 in Geneva. If you compare that to the current price of the new apartments available on the market, you can see that those rents are way under the average rents that are currently you can find currently in those markets. In terms of dividend, we always say that we want to be a fund that has very little surprise in its development. So we are careful in the way we distribute dividend, because we want to be sure that the shareholders will have a very good visibility on the way the dividend will develop in the future. So as you can see, in the last four years, the dividend increases regularly. It's going to increase again this year for the distribution that will be done in July, and it is going to increase again next year. So we are definitely in a position, and we manage the portfolio in a way to ensure that the dividend can be increased year after year. Last year we didn't distribute all what we could distribute, but we want to make sure you will have dividend year after year and in a growing fashion. That's the way the share price has developed on the market. As you can see, a bit of uncertainty when we announced that we were going to take over the portfolio of the DREF, and but since then we've shown that definitely we were able to absorb this portfolio, and I think we've done a pretty good job in that project, and now the market recognizes that.